Hi, good morning, everyone. So today we're going to talk about a very important topic, and the topic name is piercing the corporate veil. And so what does that actually mean? What does it mean to pierce a corporate veil? And I'll get into the full definition. So the benefit and the basis of opening up a corporation or any company such as an LLC is to separate that legal entity from its shareholders. And therefore, the corporation's shareholders, or it could be members if it's an LLC, are not held liable for the debts that are incurred in the corporation. And so this veil, that they call it, protects the shareholders' personal assets. However, when a corporate officer or director or shareholder uses the corporation for a personal gain or commits any wrong or injustice against a third party, the third party may sue to pierce the corporate veil. And they do that in an attempt to hold the corporate officer, the director, the shareholder personally liable for their wrongdoings. And so this is something that's very important. I've seen cases and claims move forward where my clients are named personally. And even though this would be a business matter, a business transaction, of course, the first question always is, well, how can I be named personally? Don't I have this protection? Don't I have this veil of protection from the corporation? And so you would, but what would happen in these types of cases is that whether it's from the government or whether it's from another party, what they're trying to prove is going to be two things: that the individual exercised complete domination over the corporation with respect to the transaction that's at issue or that's at dispute, and such domination was used to commit a fraud or wrong that injured the party seeking to pierce the corporate veil. And it's very important that business owners conduct business, especially financially and in terms of their records, correctly. Because if they do not, then there is a chance that that plaintiff, or perhaps even the government, if they name one of the shareholders or owners personally, could possibly have a claim against them, and their personal assets can be at risk. So to protect business assets, business owners should make sure to do the following to avoid the risk of piercing the corporate veil. And I jotted down a few points, and of course, there are certainly more expanded definitions of these protections as well. So this is not a full list of what can or should be done. I always recommend to consult with your attorney to make sure that you are following these points or the expanded version of them properly. But just going over just some of those options, one of them would be to comply with the required corporation formalities. And then this could include issuing stock to shareholders, creating, updating the business bylaws, electing directors, holding the shareholder and director meetings. And the reason for this is you would show that the corporation is active. And so it was not just opened as an alter ego of the individual, and that no actual business transactions are being handled, and the business is not being run as a business, and instead is just another bank account for the individual. And that's why it's so important that you comply with these required filings, that you keep track of corporate records, and so on. The second point is to ensure that the corporation is adequately capitalized and to make sure that the business has the resources necessary to continue operations. This is something that we see come up if we have one of our shareholders named individually. Very often, one of the points is that the business cannot sustain the type of judgment or the type of damage that it already did. The third point is to keep adequate documentation of business actions, to make sure to record any major business decisions and keep minutes for shareholders and director meetings. This does seem to go together with the first one. It is a little bit different though, because the first one is really just complying with the corporate documents and records, whereas this was for the purposes of recording major transactions and decisions made within the business. And then the fourth, they're all equally important, but the fourth, I think, to take specific attention to is that to make sure not to commingle any personal assets with any business assets, and not to use corporate funds or property for personal use. In other words, there must be a separate bank account for personal and business expenses. Any property that is owned by the corporation or belongs to the corporation should not be utilized as well by the individual. There are some exceptions to the use of a property. Again, very important to make sure that when we talk about commingling personal assets with business assets, that's something that you're seeking legal advice on, and something that you could specifically get a definition of, would this be considered commingling, and not just to guess, because we have seen more claims come in for piercing the corporate veil under the category of commingling than the others. The others are just added in addition, but commingling is really where that baseline would be for attempting to prove that in fact the company is just an alter ego. So what I'd like to do now is I'd like to pass this over to Jane just to give us a little bit more information from both the documentation, financial side of this as well, just to let us know what to look out for and be protected for piercing, not to pierce the corporate veil.
Great. Hi, everyone. Thanks, Irene. So basically, to protect business assets, business owners should make sure not to commingle funds to avoid that risk of piercing the corporate veil. That's what Irene was saying, and that's really what I'm going to concentrate on. But just to kind of commingling refers to the mixing of funds belonging to one party with another party. So for example, it's personal funds for business purposes or business money for personal needs. And I kind of want to go over examples that some people might not be aware of. So bank deposits made payable to your business from a client and deposited into the personal bank account would be considered commingling. Making withdrawals from the business checking account to pay personal expenses without documentation. Depositing personal money to pay for business expenses, using same bank accounts for the business and personal needs, writing business checks for personal expenses, or using a personal credit card for business expenses to get interest points or points to use for something else, moving money back and forth between business and personal accounts without documentation. So it's fine to move certain expenses when we know we're going to record it either withdrawals or a loan, but if you're just moving money back and forth and it's hard to then differentiate whether it's personal or business, that's going to create a problem. So good records make you look more professional and make all the paperwork more accurate. It helps with accounting records. Being diligent helps with understanding the business better, and it helps with taxes, because if you don't have a document, you can't take the deduction. And so the primary reason for forming an LLC or corporation is to reduce the personal liability risk. Commingling funds takes away that protection, what Irene was saying. So it's really, really important to make sure that you have proper documentation, and then you have the separation between business and personal, or just proper bank accounts. And as always, if you have any additional questions, really feel free to reach out to us.